Hello, everyone. James here. This is a morning session, just a quick live update, and for members and public have been welcomed and invited. So welcome to all the public too. Just checking that everything's working, and it is. So welcome to the Arcus FX members. If you'd like to join, you can join for $97 a month. There's a link below, and you'll get good value from that. That might be the last time I mention that. All right. So I'm just going to sort of sniff around here and have a look at what's going on in the pre-European and London sessions, and there are a few things that are moving. So let's have a look at what's going on. And I think we'll start with the dollar. And actually, I'm still a bit worried about the dollar. I think it might have to recover a little bit now. We've moved down very sharply, down to about the bottom of my arrow where I thought we would get. Now, I think we might have to bounce a bit. It's a bit oversold. The RSI is approaching oversold on the day chart here on the dollar. And we've now broken down through this cluster of moving averages, which we may need to just shove back into and retrace by about 1% or so on the dollar, maybe back up into the gap, which I was hoping for all the time. But notice that the 20-period moving average is rolling over, covering the gap now. Maybe we won't get back there anytime soon. But if we do, look for the top or the bottom of the gap as possible targets, and then and maybe into the moving average cluster. As the dollar bounces a little bit, which I expect it will, I don't predict anything, but I expect it will. That will then drive down a few of the risk assets, which are also overbought, overblown. And notice that the NASDAQ has just tipped up into a new all-time high. And there we go, we've done it. And we have a new breadth thrust on our hands. There's the first one coming out of the tariffs. Here's the second one coming out of the Iran war. And look at what happened on the first occasion. Could we do the same here? And if we do, we're going all the way up to 29 or 30,000 on the NASDAQ. All right, so quite sobering if you're a bear. We've now broken to a new all-time high, but we have this little trend line underneath us, and we're incredibly overbought. And as the market is wont to do, we'll probably tip the underside of the trend line, break up to this new all-time high, and then get everyone trapped, come all the way back down into the moving average cluster and the breakout zone. I don't know how deep we'll get. I've put a very deep retracement here. We might not get that deep. We might only get, to the top line here, the black line, or depending on how far we get, if we get a lot higher before pulling back, we might only just come back down to this trend line. But the general idea is to buy on dips, and dips we should get today or during the rest of this week. If not today, tomorrow. Tomorrow's Friday, so maybe it's free fall Friday tomorrow. Be very aware of that. And free fall Friday is always a good free falls because the weekend's coming up. There's, everyone gets a bit scared, don't want to hold positions over the weekend. Trump might tweet or social truth something out. Something might go wrong. So, free fall Fridays are just that. And so maybe we'll get that tomorrow and not today. And maybe today we'll just, dribble up further into that top line. If and when we get there, I'm going to take profit on the long side because I've got a long position from down here, which is hedged over here. So I've still got the long on, and I'll probably take long profit on the long side up at wherever it turns around, possibly at this trend line, maybe a little higher, and then look to add some shorts to get this moving back down into wherever it wants to go, and then take those shorts off and add some more longs back on. So basically, we're going to be trading this little range until we have a clear breakout. But I do think we're going to pull back. And if we do pull back, we should pull back on cryptos too. Bitcoin reaching that critical zone. We're going to have a look at the short-term charts on all of these in a minute. Critical zone. Now, I've changed my thinking on this. This is really important. Private group members, I want you to pay attention. This is my first thesis on Bitcoin, that we are in a bear flag and that we're going to move down and then potentially reach into the 40s before a real bottom is formed on Bitcoin. That was my thesis, although I am long, all right? Keep that in mind. I'm long, but expecting this to turn around at some point and move down. I was expecting that. However, my thinking has changed. Now that we've seen the NASDAQ and the S&P reaching new all-time highs, look at the S&P as well. Should have mentioned this one. Also, new all-time high on the S&P, blasting through this top line and the triple top, just like I said it would. If you remember, I've been saying this for weeks now, that this is more likely than moving down, and it's done exactly that. But now we have the same problem as the NASDAQ. A spike up through the all-time high. Look, I mean, there's not a red candle in sight since we bounced out of this bottom here at the trend line and broke up through. And now we've done exactly the same thing broke through the double top, in this case a triple top. There was another triple top. Didn't put the other blob in there. It's actually a real triple top. We did exactly the same thing. Triple top. I mean, it's uncanny, isn't it? Triple top there. Zwag, breadth thrust out after the tariff sell-off, and then the recovery and the relief rally. And here we go. Sell-off because of war and the relief rally through the triple top. And there we go. Look at what happened last time. We had to pull back, right? A little bit of pullback here on the S&P. Once we did that, several little pullbacks, which are normal. But on the NASDAQ, which is the tech side of things, we had a much more serious pullback after that breadth thrust got going towards that top. We're at the top now. And once it broke through, it didn't look back. We've already broken through. So maybe we're not going to look back, maybe we're just going to melt up like we did last time. Or maybe we're only down here, but now that we're right back at the all-time highs already, this kind of scenario is invalidated. So either way, we're going to pull back and bounce out, or we're just going to keep going on the NASDAQ, I think. And so I think risk assets have got a chance of, and they've proven it, by the way, basically by moving up to new all-time highs, breaking and destroying everyone's predictions, except for mine. I was predicting this all the time, as you will know, and I'm not exaggerating. I was looking for longs, and I've been looking for longs all the time. We finally got them, and we've got some good positions on here. So yeah, so I think we're going to hit a top sometime, either today or tomorrow on the NASDAQ, and then come back down, but only for a short retracement, and then continue to melt up. Maybe a larger retracement if we have to do that NASDAQ thing, but we've broken to new all-time highs. Now, what's that going to do to Bitcoin? We're coming back to the story. What I thought was that that's what's going to happen. But if we do actually, now that NASDAQ and S&P have led the way, and if we do follow suit on cryptos, we're not going to go back down. We're going to faff around in the range underneath this channel and falling trend line top. We might not get through it right now. It might take a few days or even weeks if the NASDAQ and the S&P have to pull back. But I don't think we're going down anymore. I think we're going up. And I think the path is more likely to be a bounce out of here and invalidation of this green flag and a break up through this long-term channel line, or trend line rather, and then on up towards the 200-day moving average and the bottom of this very large ledge. So my next target now for Bitcoin is actually about 87 to 85,000, maybe 84 and something like that. Let's call it 85,000, all the way potentially up to about 97. And that's where our original long positions are all situated and all hedged, tucked away in bed nicely. But when we get back there, we'll take those shorts off. I've got loads of shorts on. I'm not going to take them off. I'm not going to take the short hedges off because I don't know what's going to happen here. But if we do start moving up, I'll get a chance to take some of the short side off for profit, actually, and then build the long side if we can keep moving up. My general idea, I'm a Bitcoin bull, but my general idea was that we'd have to visit into the low 50s, maybe 40s first before moving up. But I'm beginning to change that because of the price action on the S&P. Gold and silver, I've just hedged both of these. I don't know what's going to happen next, so don't want to talk too much about it. We were short on gold. We took profit, hedged it, and we sort of had a long hedge on silver, which I've now hedged as well. So we're now directionless on both gold and silver, but we are long on copper. Good long and solid long positions here on copper, starting off right down at the 200-day moving average over here, where we got our last long tranche, almost perfect. It's always good when you get a market doesn't do it all that much these days, these perfect technical levels that hold and behave as they should. Markets are all full of algorithms and fancy pants players with big money who think they can manipulate the market by driving the price through levels, stopping people out and reversing back into the correct direction at some point. That didn't happen here. It was perfect. Came back down to that exact level, right? Swing high, double top over there, 200-period moving average, 61.8% Fibonacci level, into the valley between the two peaks in volume. Absolutely perfect. So we got long down there. That's the only one that's really moving up with vigor, whereas gold and silver are either in preparation for a big launch out of here, in which case, we've got longs and shorts on both of these, both hedged now. So we'll play this. Maybe this could, metals could just be a range trade play for the rest of the year. That's, metals do this, particularly gold, maybe not so much silver, but let's have a look back in the past when we get into this range quagmire on gold. There's a very good example. Big rally out. This is going back to 2023. Big rally out, nice one. I actually got long there at that triple bottom at 1630. I remember it to the penny. Everyone was bearish on gold. I don't know if you were trading gold at this point. We broke down through key support. Seems so minor now, from 1670 to 1630, and everyone was freaking out. A $40 drop. And nowadays, a $40 drop happens in split second. But we broke down through there, formed that triple bottom. And that's where I got long on gold for the very first time on this big bull run that we've seen ever since then. I literally bought the bottom on gold. Didn't hold on to that position forever, of course. I'm a swing trader, I'm not a gold hoarder, but we've been in and out and short on occasion as well. So yeah, so look what happened. This is what I'm trying to say. Once we bounced out of there from that beautiful, perfect, absolutely delicious triple bottom, we got into this range at between $2,000 really, and it's $1,800, a $200 range, and that took all the time from January 2023 until we eventually got out of that slush. February 2024, an entire year was spent in that consolidation, as it turns out, accumulation range, and then we burst up higher. Now, it's not unusual. I mean, if you look at the long-term chart, gold really is incredibly, unless it's completely repriced, which it probably has or is busy doing, but this doesn't happen overnight. And look at the size of that rally. I keep on thinking gold will come back down to $3,500, and everyone thinks I'm mad, but really, that's not a stretch. And if I draw a fib right from that level that I was talking about, where I originally got long all the way back in 2022, and draw it up to the top here, let's look for a halfway back pullback, right? 50% retracement, which the market always does, or very often. And the 50% pullback is at 3,625, just above that triangle breakout, which set off the next stage of this rally. Not implausible, and that would be the ideal buying point for much longer term holds and much larger bets on long swings. So there you go, that's gold. But for now, I'm hedged. I don't know if we're going to have to go down or up, because that downside is awfully tempting and beckoning for a large number of players, including many of the players on the COT report that we can see the positions of, including managed money, commercials, non-commercials, hedge funds, swing traders, hedgers, and retail traders. When we look at that, we can see there is definitely some hesitation and some massive short orders on the commercial side, on gold particularly. So massive short orders, they could be hedges against the longs that they're holding on to, of course. Doesn't mean that they're going short, means that they're remaining long potentially, but hedging the long position like I've done actually. So we've got longs and shorts on both gold and silver, so I've hedged. And I'm not surprised that commercials, large commercials, with thousands, hundreds of thousands of contracts are now hedged. So maybe they're not going short. Don't get too excited. Natural gas and oil. Yeah, so that's my strategy. But copper, as I said, the whole week, it's my favorite. Now, natural gas. I love the pattern here, but it doesn't mean it's going to work, right? I put this up on X a couple of times yesterday. We talked about it in the session. There's the one up, one down reversal candle at the wedge bottom. We don't have a lot of impetus for this to go up, but I like to trade off the charts more than anything else. And I do look at weather, and I look at war and geopolitics and interest rates, who's moving money around, what the US is saying about LNG, and what's happening in Europe, and what's happening with supplies in the South Pars fields, and what's going on in Iran, and what's going on in the Russian and Ukrainian gas fields and the transport routes around there, which everyone's forgotten about already. So yeah, keep an eye on all of that, of course, and it's very confusing and complex. And that's why sometimes it's better just to simply look at the charts, or at least if you can't make sense of what's going on in the world, which I certainly can't. I think I've got an idea of what's going on, a vague idea, but no one knows, unless you're right up in those echelons of power in those decision-making corridors, and you know what the real plans are. I sound like Tucker Carlson now. Don't want to sound like him. I like Tucker. I think he's gone a bit weird. The real plans, what are they? That's how Tucker would say it, right? So I like to look at the charts if in doubt, right? So there's a lot of uncertainty in the world, and the charts often tell us why we should be doing this or that. Not why, rather, what we should be doing, not why we should be doing it. And when we look at this chart, you can see it's got a rounded bottom with a 1 up, 1 down candle in the middle at the bottom of a falling wedge. We're not above the 20-period moving average on the 4-hour, which we want to get above. We've only got above it twice in the last month, and both times we fell, that's the green line, failed below it on both occasions, there and there. And we tried there again a little bit, but we didn't even hold it. And we're going to try again now, it looks like, approaching that 20. But the most important thing is we've got to get through the wedge top. And then these subsequent ledges, there's one right above us here at 3.71 that I keep on pointing out. We haven't moved far away from it, by the way. And I put up on X, my last entry tranche was at 2.6 precisely. And we're now at 2.58, call it 59, just about 2.59. So I'm 1 penny away from that last entry, and that's okay. I've got other positions up here as well. I'm not worried about those. I'm not worried about any of these, actually. I don't trade this on leverage, so it's not a, I want to make money off natural gas. There's enough movement in the natural gas price by itself without having to leverage it, and therefore I choose to trade it mostly on leverage. But it's difficult to go to zero if you don't have or have very little leverage. So try to keep your position sizes smaller if you're trading natural gas. Learn how to do it properly, and then ramp up your position sizes later on. Trade unleveraged. You can do that. Then it doesn't really matter what natural gas does, because no matter what price you get in, it's always going to come back there. It's a ranged market, natural gas. It trades between roughly $5 and $2 all the time, apart from a few spikes up and down below that occasionally. So whatever price you get in, or whatever direction you get in at, the price will come back there at some point, most probably. But so it doesn't matter if you're not trading on leverage, but at the same point, you don't want to be holding on to meaningless losing trades. So it makes no difference. I don't want to be in a losing trade because I don't want to be in a losing trade. You don't want to be in a losing trade because you might be over leveraged. Doesn't matter. Neither of us want to be in a losing natural gas trade, right? What's the point of trading a losing trade? So I wouldn't be in this if I didn't think that it looked really good. And I still think that, despite the fact that there's been no reaction. And actually, the longer it takes to react and not get above, first of all, the 20, then the channel or wedge top, then the 50-period moving average, then the 100, then the, get out of this, what I call the chop zone, moving into the day chart. I call it the chop zone. You can see why. The market can get trapped in that zone, in a bog, really, between 2.8 and 2.5. So we don't really want to hold around in here for too long, and we want to see this bounce out. So anyway, if we do move down, and I think 2.5, I'm still looking at the bottom of this orange zone as a potential target still, which means we could still faff around here in this channel and do a little bit more. Maybe we won't get lower than that double bottom that we've already seen, but maybe we've got to do something like that still. So maybe we won't get down below that 1 up, 1 down 4-hour candle set there. There's another little one there. It all looks quite constructive, to be honest. And if you look at this on a, I suppose, 15-minute chart, it all looks quite good. There's the last candle. And there's the whipsaw 1 up, 1 down that you can see on the 4-hour. There's another one, 2 whipsaws. And that whipsaw there subsequently took out, whoops, something happened. Can you still see me? Let's just check. Something weird happened. I think it's okay. I just lost my screen. Anyway, so that whipsaw there subsequently took out 2 swing lows. In other words, liquidity traps or bear traps. Took out that one there. Let's have a look. Took out the one in the middle, that one there, took it out and bounced out. So a liquidity trap, got the bears trapped, got the longs interested. Then it came back down again. Again, another one down below that next new low that we've just created, trapped the bulls, got people interested in the short side and bounced out, trapping the new bears. So a very, very nasty whipsaw at a key level at the bottom of the wedge with 2 liquidity traps, bear traps in the process. Not just one, but 2 in a row. Absolutely devastating and decimating highly leveraged retail traders. You might be one of them. So, and since then, we've not made a new low. And so 2 clear outs, 2 bear traps, 2 liquidity grabs, and maybe they're done with it now. Another little one over there, maybe just a little bit more playing around. This is clear manipulation, right? There and there. It's whipsaw motions, which they use to take profit at the top, take profit at the bottom, take profit at the top, take profit at the bottom, whilst you're all getting wrecked. And finally, the real move begins. And you can see, I think, generally, if you look at the COT report, the real move is a groundswell and underswell to the upside. And not only the COT report, but the general market damage to the South Pars gas fields in the Persian Gulf, damage to facilities in Russia and in the Crimea and in the Black Sea region, more demand for natural gas. Donald Trump talking last night, if you were watching, about these companies that are building natural gas electricity generation plants to power AI, data centers, warehouses, Bitcoin mines, and general brainy stuff, right? Building natural gas powered electric plants in the US, and they're under construction as we speak. And Donald Trump spoke about it last night, just a few hours ago. So I think that's the real story. And this is the messing around designed to clear out the bottom, get you all trapped, get you all negative and bearish and miserable and upset and illiquid and broke. Lots of it going on here. Absolutely magnificent. You know, they did a good job, to be honest. Really good job. Twice. And now the real move, potentially, and I'm not saying this is it, but it's what I believe. And until proven otherwise, I'll keep with that story. The real move is now being heralded by Trump, by these companies, by, you know, bombing gas fields, just by everything, really. And what we need to see is industrial demand continue to grow. We've seen a weak economy. GDP growth was very poor. The next slot that needs to fall into place for natural gas to remain a bullish commodity for a while is for industrial production. PMIs need to pick up, all that sort of thing, and optimism. But look at this 15-minute chart. I think it looks great. This is the strongest 15-minute candle. Is it 15? Yeah. Strongest 15-minute candle we've had in quite a while, actually, going back a few days, apart from the whipsaw. Right? Just ignore all the whipsaw. This is the strongest 15-minute candle that we've had since the 10th, Friday, the 10th of April. I mean, now the 16th. So about a week ago, this is the strongest 15-minute candle in a week, apart from the messing around fake whipsaw stuff. All right. I hope that you found that useful as a natural gas trader yourself. I find this stuff fascinating. I hope you do. And if you're a natural gas trader, you should find it fascinating because it affects your profits and the way you trade. Now, crude oil, just short, really. You know, this is going to keep moving down. We might get blips up back into the channel occasionally. I don't think so. Maybe, you know, anything can go wrong over there in Iran. But and we've still got a gap above us, and the channel center line has not been retested. So I'm still allowing for the top of the gap at $100 still. Another retest of $100. We're down below 90 now. We want to actually stay below 90. If we can stay below $90 psychologically, the rest of the risk markets should do okay. Even though it's pretty expensive, it's not above 90. And that's a key level. When you're into the 80s on oil, the world seems like a lot safer and better place. When we're in the 90s, you're already thinking 100's just above. So we don't want to be in the 90s. We want to be in the 80s, big psychological switch in mind. And we're in the 80s now, 88.4. And it would be a pity if we had to get back into the 90s or into the hundreds, or as far as 100. But it could happen. Nevertheless, I've added some more shorts on here. We've taken profit on those longs right up here where you can see that next red arrow. So we got short, we got long at the bottom, took those longs off and got short again, and we got even shorter again on the breakdown through the channel. Target is $68. That's the gap miles below. There's a gap above us at 100. The top's at 100. So we've got two gaps, one at 68, the bottom of this other one is at 98. So 68, 98. Do we have to visit both of them? If we do, which one first? Or do we not have to visit both of them? And if we don't, we're not going to visit the top one. We will definitely visit the bottom one. And so it's all eyes on $68. It's also the top of the wedge, not the wedge, the falling channel that we broke out of that sparked off this move at the beginning of the Iran conflict. And so we must return back to where we started off before the Iran conflict, and that is right there at 68 bucks. You can see I've got a blob drawn in there even, which I drew miles, a very long time ago. And I'm going to allow for this blob to be scooted along now because it's not going to get there in time. And I'm now aiming for about 60 bucks. We're going to get through 68 and this channel top, but by the time we get there, we may just be, you know, miles down here already. I'm just going to draw this very roughly. It's going to take some time, you know, so maybe it's going to take all that time, and that would take us into next year really to get back down into the 50s. So that's, you know, it's going to take time. If it takes that long, it could be a lot quicker. And there are ways and means in which the US can propel this price down faster than usual through manipulation of price and through rhetoric, and potentially through manipulation of reserves and the dollar and so on. It's all quite a big story, this oil story, and it's not just a small story. It's a big one, as I said. It's quite a big story. It's not just a small one, it's a big one. All right, let's go back to the 4-hour chart on natural gas and keep an eye on that. And now looking at the 4-hour, it looks a lot better. I hope for everyone that is trading this is being useful for you. I know there's been a lot of panic about oil and gas. Understandably, the panic wasn't caused on natural gas by the charts. It was caused by the thinking of what's going on in the Persian Gulf. The panic actually manifests itself on the oil chart, naturally, but not on the natural gas chart, funnily, even though the South Pars gas fields were extensively damaged. I think we're due for a massive, massive short squeeze on natural gas. And I know everyone over on X, and good on you. Welcome to you all on X. I don't know if this is showing on X, but if it is, all my antagonists and some of my protagonists even think I'm completely nuts thinking that we're going to have a massive short squeeze on natural gas. Why? Why? They're saying, well, positioning. I'm seeing the market positioning massively long, swinging that way. We just need a catalyst. And of course, this chart looks absolutely beautiful, as I said on X yesterday. It's a huge opportunity for a very powerful short squeeze. Whether we'll get it or not, I don't know. It doesn't really matter. But all I want to do is get something out of this trade, and it's been a long time coming. So we'll see how we go. Going to the short-term charts, I don't think we'll get anything around here until the session opens later on. I might do a US session and have a look at the short-term charts and look for some day trades. But essentially on my day trading charts, and this has got nothing to do with swing trading, completely separate approach. I'm doing some day trading now that my channel's been hacked over at Arcus FX. I'm doing just a video every day here to try and preserve some momentum in my content production, and also to make sure that members don't lose out on the things that they're trying to find out. So this is these are the charts that I use for day trading, just for a little bit of content and for interest, because people have been asking about day trading. Members have been asking. These are 5-minute charts. I had them set to 15. These are 5-minute charts, and basically you can see natural gas massive move up. This system shows that Bitcoin, gold, and natural gas are all long, and we should be looking to buy dips today. I covered that earlier in this video when we were talking about NASDAQ and the opportunity for it to break up to quite a high peak today, quite a big spike higher, and then a move back down. Now that we've got to a new all-time high on both the NASDAQ and the S&P. This one only by a penny or a pip, whereas the S&P is surging and did actually close yesterday. Did it? No. Yes, it did actually close yesterday above the all-time high very late. So there you go. A pullback from here anytime soon will put us into a drop on the short-term charts on Bitcoin. They'll all probably drop simultaneously, Bitcoin, gold, and NASDAQ. And then we'll be looking for an opportunity to buy on dips when we get a trigger or a signal on these short-term charts. You can see there that the green line, for example, on Bitcoin, so on Bitcoin, the green moving average is, hang on, this is the 5-minute chart, is below the red one. Hang on, I've got something wrong here. All right, just ignore that for now. What are these moving averages? We'll come back to this. 20 on the 4 hours. Yeah, it's actually dropped down. Actually, Bitcoin's actually got down. So we'd be looking for shorts on Bitcoin, actually. So we could be looking for shorts now as Bitcoin rallies up. This is natural gas. Sorry, man. This is why I'm confused. I'm looking at completely the wrong chart. So here, natural gas is actually short on those charts. That's why I was so confused. I thought Bitcoin was long. Of course it's long. It's been moving up every day. So here we got the green moving average, which is the 20-period moving average on the 4-hour chart, superimposed onto the 5-minute chart. And this is the 20-period moving average on the day chart, the red one, superimposed onto the 5-minute chart. And very simply, when the green is above the red, we're looking to buy, and vice versa. And so we're looking to buy, and we're now looking for dips with the RSI down below the 30 level. So we're looking for an oversold RSI. As I said yesterday, you could use any oscillator that you want. It doesn't make any difference at all. As long as you get into an oversold condition in a bullish market, that's what we want, right? We want to be bullish. We've established that from the moving averages. And now we want an oversold condition on the short-term charts in a bullish medium-term swing trading market. And once we get that oversold condition on the RSI on Bitcoin, we'll then look for the entry signal, and that's based on price action using the candles only. And also, one more addition to the Bitcoin strategy is that I always allow for a fake out, for a sweep, for a trap on Bitcoin before taking the trade. Here's a good example. There's the ledge yesterday, and we had the sweep trap. We did it twice, right? A sweep down below. There's the trap. We did it again over here, but the real level was held. And so I always allow for the sweep. So once we get a trade signal to buy, for example, I wait for the sweep and then a second signal to buy. That's Bitcoin specific, simply because Bitcoin, it happens on the other instruments as well, but Bitcoin is particularly prone to doing that sort of thing. All right, now, wonderful. I hope you can all hear me. Good morning, everyone. Clear pass. Good to hear you, see you, and I'm very pleased that you shared with me in the private group your thoughts about being left out in the cold. I'm glad you came back in and managed to get some respite for your thinking and your stress. Good day, Manu. Martin. Thank you, Sicky P. Sicky P, thanks, mate. Keep an eye on gold. Yeah. So those are my thoughts, folks. If you've got any questions, please put them up in the chat. These sessions are not really for the public. They're for my private group members. But as I said, I've made them public so that just to get a little bit of traffic onto this new channel, because I don't know, no clue as to whether I'll be able to recover Arcus FX or not. So James trading is all I've got. It's the only way I can communicate. So I thought I'd put it out in public. But if you'd like to join the private group, it's $97 a month. There's a link below, and you should join if you're struggling with your trading. Anyway, that's it for now, folks. I think I'll come back in the US session. This has been a shorter one, 33 minutes. And then seeing if there are no other questions and not as many people in here earlier in the day, the market's about to open over in Europe in a few minutes' time. I'm not trading the German 30 at the moment, but I think this one's got less of a chance if the dollar. Maybe this will pick up a bit now if the dollar pulls back, giving it, actually maybe not. Yeah, if the dollar pulls back and rallies a bit, the euro should drop a bit, and that could drive the German 40 up. So maybe this isn't a bad spot actually, and we did fill the gap down below there, and it's potentially possible we could break up through this moving average cluster today on the German 30. If we look at this on the 15-minute chart, let's see what it's looking down. Bit of a dip there. And on the 5-minute chart, if you're day trading and you're day trading the German 30 or 40, whatever you call it, you would be looking to buy dips as well. This is also bullish on the short-term charts. And so we've entered this very large point of control here, very flat. It looks like a mountain in Colorado, right? We've this very large and powerful zone here. And, it might be good for long. It's not one that I'm keen on trading today. And I think I'd rather be looking to short NASDAQ and S&P at some point when we get to the tops there, and then look to reverse those on the dips and get back long on those. So I think German 30 is a bit trickier, particularly with what's going on in Europe. Now, let's have a look at Bitcoin. You can see that's pulling back down below 75,000 as well. Now, I imagine that we'll see some of the other stocks starting to pull back. There's Bitcoin pulling back just a touch NASDAQ not pulling back at all, actually quite strong. Gold pulling back a wee bit. I don't know what gold and silver are going to do. It's best that we trade these off the short-term chart. So if we get a buy or a sell during the day on gold, I'll look at that on this chart. And then and natural gas, we've already got long, and that's looking good. But don't get too gung-ho on natural gas. We're still below the 20-period moving average. We're still below 2.6. We still haven't even approached the 2.71 resistance level again yet. And this flat bottom ledge, I should put a black line under there just to remind us that it's even though it's a minor level, very tiny minor level, it's a pretty important one the way we reacted to it yesterday. So there it is there. That's that skinny black line at 271. Sorry, that's 264. I got the wrong. Where's 271? It's this one. Sorry. There's one at 264, but it's this one that we were watching yesterday, really. 271. Very important level there. It's not quite 271, maybe 270 to 271. So if we can get up through there, we'll also be above the 50-period moving average and the falling wedge top, and that very key wedge, which was broken, retested from underneath and failed. So it's a key level, 271, not because it's a over-under trading level only, but it's also because it's the 50 and the trend line falling down there. All right, folks. Well, I hope you found that good and useful, and I'll try and do this again a little bit later on in the US session, and I'll see you there. If I do, take care. I'm really hopeful I can get my Arcus FX channel. I'm in communication with someone on X who's a representative of the YouTube team. I don't even know if I can trust them, but it seems that I can, and they seem to be able to potentially restore my account. And it's not just the YouTube channel is actually the least of it. It's my Gmail account. My all my course material is on my G folder, my Google folder. I've got loads of stuff in my folders, my email address, my access to all various things that I use Gmail for. Some of the minor things that all the tools that I use Gmail to access. Loads of things. So those will be the main improvements. Am I going long on Bitcoin, Manu? No, I'm not, mate. I told you what I'm doing. All right. So I'm waiting to see what happens. I'm already long on Bitcoin. I'm waiting to see what happens at that level, as I said. But I now think that we might have to have a little bit of a pullback, and then we're going to go on higher. But let's see if we can get the pullback on NASDAQ, Bitcoin, S&P, German 30, and a few of the stock names. Now, we've also got some names on, some good names. And I did notice that MSTR, the crypto names, the crypto stocks, MSTR and Coinbase doing really well yesterday. And other names that were in, Microsoft, Tesla, Palantir, we're in all of these. And then going across to some more over here. Oh, that's the coins. Yeah, so these are some of the names that we're in, all doing really well. And let's just save that. Yeah, I'm just not too sure about metals. Anyway, folks, we'll get a little bit more clarity when we come back in the later sessions. But as you can see, natural gas still moving up quite strongly, gold holding firm, NASDAQ doing okay, and Bitcoin just sideways. So we'll figure things out later on. Okay, folks, au revoir. See you soon. Later on today, I hope. But if not, I'll see you tomorrow. Hi there, I'm James. I'm the founder of Arcus FX. I'd like to personally invite you to join our 24/7 trading group. This is built for traders who want an edge. Inside, you'll get access to live calls on Forex, commodities, crypto, energies, and metals, along with exclusive daily analysis designed to unlock your trading potential. And this in both traditional and now in digital markets. I'm talking Bitcoin, crypto, altcoins, and tethered currencies. You'll gain early access to insider news, real-time updates, real-time support, and premium educational content. If you want to sharpen your skills and boost your success rate, then join me and Paul in this community. This is a fast-growing community of traders who are now writing their own success stories. So don't wait. Join up now. Your edge starts right here.